Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Monday edition. Again, just so you guys get a quick update, I will not be doing a show on Thursday as I will be flying to San Francisco for an event that I'll be giving, which may see some of you there. I've already gotten a couple emails from some of you, so excited for that. Let me bring that up here. I guess here's our list for today. This is what we're covering for today's show, and of course I can go into other topics if you choose. But here, we'll look at the question, which was prepare for a recession, which I thought was an interesting topic. I've had multiple questions on that topic, so I'll address that today. We have the sell in May, go away phenomenon, more problems for Boeing. We have lending woes, and then a couple of listener questions. If I can get to it, I will not do an hour show today. I'm going to do my best to keep it under the 1 hour mark, which has been a tough goal for me to hit. All right, let me start things off with the gratuitous plug for myself, which, of course, I know you guys all want to see that. There is the Investor Master Symposium. That will be up in San Francisco. I'll be there Thursday. My presentation starts at 10:30 a.m. I've already heard from a few of you that you'll be there, so that's great. Good to see you guys, and maybe we can go out and grab some lunch or a drink after that. I think my flight back to Orange County is at, what time is it? Is it, my flight's at 6 o'clock. So, Lisa... yeah, you know what? One sec. Now you said, did you lose connection? I hope not. So here's what I did for today. When you log in, when you start streaming a show on YouTube, it gives you three preferences for stream latency. One of those is normal latency, which is about 35 to 50 seconds of delay, which has been very annoying when I do these shows and I poll you guys with questions. Then there is kind of an intermediate one, which is about 20 seconds, and then there is ultra low latency, which is what we've switched over to for today. Now, that shouldn't be a problem given the fact that I'm streaming with fiber optics, where everything here should be fine. But if you are experiencing issues today, let me know what those are, because I went through and looked at all the specs and all the issues that I might have, and one of them is there may be drop connection. So if it becomes an issue, what we will do is I will actually back it down to normal. But hopefully... Oh, you hear me fine, but don't see me. All right, so yeah, just keep giving me feedback, guys, because I might switch back, but I like having it where you guys can interact with me real time. I'm just going to do a test right now, so it's 1, 1,000, 2, 1,000, 3, 1,000, 4, 1,000, 5, 1,000, 6. It's a 6-second delay. So you have a 6-second delay between, it's going to be a lot better, I hope. Hopefully it doesn't create an issue. Okay, so let's go to our event. There we go. Question was, closing YouTube again, and we'll see what happens. All right, hopefully it works, Lisa. Preparing for a recession. Now, of course, let me start off before I even enter down this rabbit hole, which I know I'm going to get a bunch of comments about how I think the market's going to go to hell in a handbasket and I'm purveying doom and gloom. I personally don't really see a high probability of a recession, if you will. Do I see the markets correcting? Yes, but I don't think we're going to see a prolonged period, at least for right now, where we see a prolonged period of markets going, significantly lower. That said, it ultimately comes down to how you feel about the markets. Everybody here has different opinions, fears, interests with regards to how these markets function. And if you feel that you're nervous about the market at any point down the road, there's certain steps that you can do. And I thought, all right, well, I'll position this show from that perspective of if something happens, what do we look for? And here's two questions that sparked this. Sarah says, my husband and I have a significant amount of money in the stock market and are concerned there is a big recession coming. How would you suggest protecting our portfolio? First off, Sarah, just so everybody knows, this is not financial advice. This is going to be, market experience and textbook stuff saying, here's what you should do in a market environment where prices are trending to lower lows and continuing to drift lower. How would you do a step-by-step protection for that, and what would we do in our long-term investments? So that's how I'm going to approach this. The second question that came in was from Scott, which says, what's the best way to make money in a market crash? These are somewhat similar, right? They're not going to be the same, but somewhat slightly similar. So I figured I would start things off with this right here. Show 910 for the TraderMerlin program, how to prepare for a recession. Now, before we get into the actionable steps and what should you do, if you guys saw the opening comment there from Margaret right beginning, she says, sell everything. Well, that of course is one way to go about it, but there might be some tax consequences for you in that. So if we get up to a point where you feel there is a recession, and let's not say necessarily recession, but you feel that there's going to be a significant market pullback that you don't want to lose the gains you have in your portfolio, right? That might be a 10% market decline, 20% market decline, something like that. Recession, bear market, that typically is when you crest that 20% off the high mark. Well, we're not there yet. We haven't even hit the 10% off mark yet. However, over the course of your trading and investing career, you will always encounter periods of time where the market drops 10, 15, 20%. And what steps can you take to sidestep them? That's what we're going to look at. So first off, the question is, do you play offense or do you play defense with this? So if I think the market's going to be rolling over, I can very quickly look at my long-term investment portfolio and say, I'm going to leave that as is, but I'm going to become much more defensive with that, meaning I will take steps to protect those positions that I currently have. So what does that mean? Well, number one, it'd be like hedge your current long portfolio. And most of you here know what that means. It means that if you have long positions, let's say you're long Boeing and you're long Intel and Amazon and Microsoft and all these stocks, you hedge that. Now, this is a little more complicated than we're going to get to in today's show, but that would involve buying directional puts to offset your position. So if you had 100 shares of Apple, you would go check the delta, see how many contracts you would need to cover your 100 shares. So if the market dropped 10%, you would make up for it on the puts you had, and thus leaving you a net neutral. You wouldn't be losing any money on your position. That's hedging your current long portfolio, and that may be a simple way to approach it. However, it can be complicated for some of you who don't understand options, because you have to go out and, again, use the Greeks and find the right strike prices, find the right delta, and then find the right number of contracts and duration. So a lot of variables there that get a little confusing. So while I think this is probably the more advanced tactic for people, there's another way out there which I personally would recommend, and that would be restructure portfolio. Liz says, sell calls to lower cost basis and buy puts for protection. That's my preferred approach to massive taxes. Correct. And I didn't add that in here, but that's a great point. Let me add that in. Liz, thank you. When we had the first two here, hedge the current long portfolio. If you don't want to sell your position, so let's say you know you're going to take a tax hit if you sell these positions because you got big gains for the past, 14 years as this market's been surging. If you don't want to sell it and you say, okay, I'll just protect myself on the downside, Liz is 100% correct. You would buy the puts directionally for protection if it does really crash. And if it just kind of goes sideways or lingers, you could then sell calls against your position and essentially pay for your puts, which is another way to go about it. So I think that's a great approach, particularly if you feel that markets are going to be slightly down or kind of traversing sideways. Sell those calls, you'll lower your cost basis. If you think there's a big market crash, well, we'll talk about playing offensive here first. I think that playing defense is if you feel that there might be a slight correction, that things are going to go sideways for another 6 months or a year. That's where I think you play defense. So before we jump into the offensive side of this, I just want to show you here, how do you protect your 401k from losses? Well, you'll never protect yourself from losses, Naomi. You're always going to be potentially open to losses. In a 401k, if you felt like you're going into a recession, you would do the second bullet point here, which is you restructure that portfolio. Everyone's 401k plan has a specific set of mutual funds in it. Now, I hate mutual funds. I think they're a sucker play, but it's all you can really do in a normal 401k. Some of you will have the ability to go to your HR department and ask them, is my 401k self-directed? If it is self-directed, then what you can do is you can now move your 401k funds into a different account. And now you can sell those mutual funds and you can buy ETFs. You can sell options. There are different things you can do, but it must be a self-directed 401k. A lot of companies offer it, they just don't tell you about it. So you literally have to go to your HR department and say, do we have a self-directed 401k that I can manage myself? And what that will do is it'll get you away from the managing fund. So again, everybody here, when you open up a 401k with your employer, some outside business has approached your company and said, hey, we'll offer you a 401k and here's all the plans and we'll even show your customers or your employees what it's all about. Yet what they don't really mention to you is you're paying a ton of fees. You're paying 1% to be in the fund. You're paying 1% management fees. Those ETFs or mutual funds may have fees in it as well. So if you can go self-directed and you're very disciplined about this, self-directed is the way to go. If you're a gunslinger and you're a gambler and you're going to take big chances, don't even think about it. Just stay in the mutual funds and protect yourself protect yourself from yourself. Yes, so Margaret says restructure portfolio. Does that mean buying certain sectors? Which is exactly where I'm going into here. I am not I'm not a firm believer in sector rotation models. This is a historical textbook thing that says when markets are in this phase, that this part of the market tends to do really well. I'll be real honest here. I think that if the market were to crash from today, let's say 20%, I think every sector is going to go down. But if the market crashes 20%, technology might be down 25%. Consumer discretionary might be down 20%. You might have something like utilities only be down 10%, or maybe consumer staples is only down 5%. I think they're all going to be down, but to varying degrees. I don't think in a normal business cycle, you get a period where, oh, the market's down, this one's up 20 or 30%. Maybe bonds or commodities like gold and silver tend to do well during recessionary periods, but at least from a stock market perspective, if the market's down 20%, most likely everything is going to be down significantly. So here's that historical rotation model. And for those who've never seen this before, you've got kind of two curves here. You've got the blue or purplish one, that's the economy. And then you have the one in red, that's the market, the stock market itself. Now, typically what you get is the market is anticipatory. It is forecasting where the economy is going, right? We're looking at all this data, trying to figure out where the heck we're going to be in December, right? Everybody here is thinking, where are we going to be by the end of the year? So the markets are forecasting or anticipating where we're going to be by the end of the year. So it generally leads the economy. However, it's not always correct. So you can see here, if going back to Sarah's question, if you felt the recession is coming, then you feel that we are up here, that we're at a market top, which means that right now, basic materials, energy, and staples would be where to buy. And I actually agree with two of these. Well, one of them definitely agree with, and I'll get to that in a second. If you feel like we're already rolling over and the economy is just starting to get worse, then you move into something like energy, consumer staples, and healthcare. So that's the positioning side of things. Now, if you felt that we're headed for a pretty big recession here, if it was my portfolio and I was going to rebalance this portfolio, I would take some cues from historical precedents from the sector rotation model, and I would be going more defensive. I would probably buy something like XLY, right? XLY is consumer staples. And why? Well, if I run through the things that I'm probably not going to cut back on, it's going to be things like my Dr. Pepper. I hate to say it. I've developed a slight addiction to Dr. Pepper. It's the caffeine or something, the sugarness. But I've cut back my soda intake dramatically over the years. But I'll have every other day a Dr. Pepper. I'm probably not going to cut back on that. I'm not going to cut back on my toothpaste or my toilet paper or my shower supplies. I'm not going to, cut back on dish soap or laundry detergent. Now, I may not go out as much. I may not, wear as many clothes, may not do as much laundry, but I'm going to do laundry if it needs to be there. Those types of things are consumer discretionaries. Oliver says energy. Absolutely. So I may actually use more energy because I'll probably go out to dinner less. Therefore, I'll be cooking at home and maybe staying home a little bit more if it in fact is a recession. And I do the prudent thing, which is let's watch my expenses, right? So energy, I'm sorry. Yeah, I got it right. XLY is discretionary. XLP. Thank you. I always get those two confused. It's funny because I always think that, I don't know why I always confuse staples and discretionary. Liz is correct. XLP is staples and XLY is discretionary. So I would go XLP, not XLY, because discretionary is that stuff that you don't really need and you just spend frivolously on. I'll show you here in a second what those breakdowns are. So we could individually take your portfolio and say, okay, I'm going to get out of Apple and Microsoft and Intel and Goldman Sachs, and now I'm going to go for things like maybe ConocoPhillips, or I'm going to go for SRE Energy, or I'm going to go into Colgate-Palmolive, Procter & Gamble, Johnson & Johnson, right? You could move in those individual securities, but you have to put yourself in one of two camps. Are you the type that wants to make all those minutia decisions, those very small decisions, or just kind of make a high-level decision on, yeah, I'm going to go into consumer staples and just leave it there? If you are, then you would go with the ETFs, like Liz mentioned there, XLP. So here's, just to give you an idea, this is XLP. Now we could go, I look at this list, and I think every one of these should do okay in a recession. Procter & Gamble. Heck yeah, I was talking about how I wanted to buy Procter & Gamble a couple weeks ago. I was selling puts on that one. Unfortunately, it's had a monumental surge in the past month. Costco, Walmart, Coca-Cola, Pepsi, Philip Morris. You can scratch that one from it. I think that the cigarette days are done, although Philip Morris has diversified quite a bit. You got Mondelez, Altria, Colgate-Palmolive, Target, Kimberly-Clark, Constellation Brands. You know, if I was to run through 4 names that I would want to add to my portfolio here if it was a recession and I was going to buy individual stocks, Constellation Brands would be on that list, Walmart would be on that list, Procter & Gamble would be on that list, and I would add Dollar General as well. Kind of cutting, Oliver says, Costco is an ETF by itself, pretty much, right? But again, this goes into, do you want to pick specific companies, which you could do, or just buy the ETF and call it a day? I would go with the ETF myself and call it a day, so I don't have to micromanage a portfolio and every day be looking at, oh, what happened to Costco? What happened to, Walmart? Just buy XLP and call it a day. Now, where is Tilray on the list? Do you think, so when we go into a recession now, do you think that brings on depression and people are going to stay at home and smoke more weed? I think actually people start growing more. Like, it's legal now to grow, I think, 24 or 25 pot plants for yourself, so why would you need Tilray? Just grow it yourself. It's not that hard to do. Let's see, you guys, a whole bunch of comments in here. There is a clouded shadow around you and at the bottom of your screen. Yeah, here, I'll fix that for you. So you know what it is, when I set up my other studio, thank you. There you go, RG. I'm trying to save energy, man. No, I have LED lights in here that highlight my green screen behind me, but there you go. So John says, I believe Dollar General is reducing stores. So is 99 Cent Store. Yes, but when you have people really starting to penny pinch and looking for ways to save money, that's a great place. So, I host trivia on Tuesday nights. It's one of my fun little things I do. Another loss leader for me. I barely get paid for it. It's been hours doing it, but I love it. I could go to Staples and buy a 10-pack of pens for $25. Or I can go to the dollar store and buy for $1, I can get 10 pens or 12 pens. So there's certain things I would be using Dollar General for, and I think that those would be pretty good with regards to a recessionary market environment. So you look at this list here, this sector rotation model, and I think energy and staples are probably my go-to 2. If I was going to add a third, it would be right here. And I think that this is where Sarah might think that we're at, which is this kind of starting to go into recession. If you look at that, it would be energy, staples, and healthcare. And that brings in companies like Pfizer or Merck, which, I'll be honest, has been actually something I've been looking at lately. Let me bring up here, go PFE. Pfizer's had a pretty nice pop over the past couple of days, but I was looking at buying Pfizer as it just had this just monumental fall from its pandemic peak of, $61, fell all the way down into the $25 range. Had a nice rally here. You also a company like Merck. Or you could just go XLV and go with a healthcare ETF. Now, this is going to be far more diversified and getting into way more other companies other than just specifically healthcare. It's drugs as well. Eli Lilly, sure. Eli Lilly's another decent one. So, again, I don't want to go about picking stocks personally. I do have portfolios where I love to pick individual stocks, but the older we get, the more you're like, hey, I'm going to do other things. I want to spend my time wisely, and micromanaging a portfolio in a recession doesn't sound that exciting. So if it was me, look at this screen right here. Let me see if I can actually get this pen working. I know I haven't been using my drawing board much because it's been driving me crazy. But let's see if I can draw a little dot. There we go, right up here. So this would be XLE, XLP, and XLV. Those would be the 3 ETFs I'd be looking for if we were actually, in fact, headed for a market recession. And I think that that isn't necessarily taking the offensive. It's just rebalancing that portfolio, which kind of was that second approach I was taking. And this isn't going to hurt you very much. Now, you will have in your 401k, you should have some targeted funds. Most of them are going to be broad market, right? You're going to have the large cap equity fund. You're going to have the small cap equity fund. But you may have specifically pointed mutual funds in there. Now, someone said, how can I protect losses from my 401k altogether? You can't. The one thing that you could do is most funds, I believe they are required to do this, is have a cash equivalent. So what you might have is a money market fund that you can put your money into, what they'll call a stable cash fund, which is typically like government bonds, which is actually paying a decent rate right now. So those are the two things you could put your money into in a 401k that you probably have available to you right now. Thing is, they don't do a good job, in my opinion, of coming to the employees and saying, hey, here's the 40 different mutual funds you have. Here's what you would use in this type of market or this type of market or this type of... They should do that at every company that offers a 401k. Unfortunately, they do not. So if you have no choice and you cannot self-direct and go into these ETFs, then I would say go with a cash stable fund, go into a something that is going to be cash or bonds, short-term bonds, because the yields are going to be high for a while on short-term bonds. Now, the other side here would be playing offense. When I say playing offense, that means you're being really aggressive. And I didn't want to go here. I didn't want to bring up the offensive side because in reality, your 401k, your IRAs, you should not be aggressive, right? This should be long-term, slow growth, compounding over time. What I've seen happen too many times is somebody gets really excited about trading and investing. They log into their 401k or IRA. They make it self-directed. And next thing you know, they're taking huge shots with penny stocks and over leverage and triple leverage things. And their 401k just evaporates like that. I don't want to see that happen. But you could, if you had the potential or the ability in your accounts, you could start building short positions. And, in most 401ks, you cannot short. You're not allowed to go short those markets. What you can do is you could buy inverse ETFs. So for example, if you thought that the equity markets were going to be going down, well, short the market. You could buy SH. So for example, here is SPY. You guys all know the S&P 500. Great last few days, looking fantastic. Here's SH. It's pretty much, we'll say 95%, the exact same picture, just upside down, right? That's the nature of these ETFs. And if you are thinking about this, please do not use the leveraged like doubles and triples. A 1-to-1, fine, because you're not going to be in it for years. It's just going to be while you think this recession is going on, whether that's 6 months or a year, maybe a little longer than that. But typically recessions aren't multi-decade things. These do deteriorate over time, but the singles aren't as bad. Don't do the doubles, don't do the triples, leverage longs or shorts in any retirement account you have. It's a kiss of death for your account and you'll lose all your money. So that's the fourth or third approach. And the last piece here would be sell puts. And this is something that assumes that you might be in cash and you have cash available. So you look for levels that are lower and you say, hey, market's selling off, market's trending down, we're in a recession, I'd like to buy whatever XYZ stock down here lower. I'd be comfortable adding that to my long-term portfolio. So those are, in my mind, the three ways that you could protect yourself and plan for a recession. Personally, I believe the defensive ways are probably the best way to go. I love what Liz was saying. I'm going to sell calls against positions I already own, and I'll be buying puts to protect myself from the bottom falling out of this market, just in case it does. And if you do it right, you can actually take the premium that you're collecting from the calls, use that to buy your puts. So if the market does go to hell in a handbasket, your portfolio will just go sideways and stay neutral. So, yeah. There we go. I think I covered that. 24 minutes it took me to get through that. Rivian earnings tomorrow. I know, man, it is funny because, I sold the 1050 puts. I think we're going to rip up through 1050 by the 17th, which is when my options expire. But you saw the tail today. Went right up to 1050 and then came right back down. So we'll see what happens. I've got the calls against my position at 1050. If I get taken away, I'll have made a nice chunk of profit, and I'll be happy with that. All right. Let me see. It's true that makeup sales go up in a recession. L'Oreal used to be one of my corporate clients. Wow, really? Makeup sales? You would think that people maybe just make themselves feel better? I don't know. I stopped wearing makeup years ago. Let's see. Ozempic is too powerful, as Cat Williams. Yeah. So someone asked me if I was going to take Ozempic. I'm like, no, not going to do it. Ganesh says, thoughts McDonald's, Starbucks came with bad earnings. CMG had a good earnings, even though CMG burritos are costlier than McDonald's. Yeah, they're costly, but man, CMG burritos are good. Like it's you walk away not feeling like you want to throw up. You eat a quarter pounder with cheese and their fries, and next thing you know, you have instant regret. Why did I eat that? No, don't get me wrong. McNuggets are my guilty pleasure, but only with the hot mustard sauce. I think people are. So a couple things have happened. Number one, the prices for McDonald's have doubled. So McDonald's prices have surged dramatically. Now other places have surged as well, but I think people are kind of weighing the cost increase in McDonald's with the unhealthiness of it versus Chipotle, which might be a little bit healthier and hasn't raised as much. If I have my choice of those two side by side, I'm taking Chipotle all day long. Let's see. Is the fall of McDonald's and Starbucks not an indicator of recession or something? No, I think it's an indication of price. Price is the ultimate determinator of everything. I showed you guys the other day the chart of coffee. Coffee futures are just straight up. And if you look at, meat costs, like what is the cost of meat for these, McDonald's? Let me go and show you here. We'll go to, I think I have one of the futures. I think I have, let's see. Yeah, so here's live cattle. Live cattle from December through March had a significant run. I mean, you're talking the price of it jumped up 15%. That's a pretty big move. That hinders their profits a little bit, but they're going to raise their prices for that anyway, right? They'll keep on moving that 401k or the 401k, moving the prices of their food higher and higher and higher. Now, what might be different here is we've had a pretty significant sell-off in McDonald's or in live cattle. It's dropped about 7%. Again, if they keep their prices right where they're at McDonald's and the cost of their main input goes down by 7%, then that may translate into better profits for them down the road. But I don't know the numbers. I haven't seen what the client numbers are. Are people legitimately walking away from McDonald's saying it's too expensive? I know when I saw some of the prices recently, I did. A breakfast two breakfast egg McMuffins is $11. Yeah, I don't think so. I'll go buy a dozen eggs and some muffins and make my own at home. And then what would you mention? CMG. I mean, this is one of the most beautiful charts. Jeez Louise. $3,200 for Chipotle. I wonder when that thing's going to split. I mean, you're up 100%. Almost 100% since October lows. That is phenomenal. One of the better performing out there. I don't know if I could give you the justification as to why. It just is doing phenomenal. So, yeah, I don't know. Ganesh, Starbucks, which I have puts on Starbucks right now at $71. The cost of coffee was a big piece to them, and that may be the piece that saves them and gets them to turn around. I am bullish on Starbucks in the long term because just coffee got so overextended and all of a sudden it's pulling back, and I think those profits are going to start to come back in. So there's at least my little piece there for number one. It splits June 10th. Wow, only 10-1, Liz or Lisa. That really should be it should be like a 20-1, 30-1. Why not? Now's your time to do it. So let's go to the second piece here. We did my upcoming event. We got to prepare for recession. Sell in May and go away. This is one of those ones that history tells us that statistically, from May to September, markets go flat to slightly down. Flat to slightly down. Does that mean sell everything? No, I think actually it means you start selling calls against your position, but it's a different mindset, I believe. Does it always go down? No. We've done this show before. You can go look at my archives where I've actually gone through. It's a 50-1? Okay, thank you. Yeah, that makes more sense. Actually, let me see here real quick. Hold on. We're going to go back to CMG. I can probably bring it up on the screen. There it is right there. Yeah, 50-1. Okay, that would make more sense because that's going to put it in the double digits. If they did a 20-1, you're still looking at $160 a share. That wouldn't really make it much justice. So 50-1, man, about time. Yes, June 26th, and you can see a little S on my screen there. Yep, it is 50-1. Highest split ever for Chipotle? Probably. Not in the market. I've seen 100-1 splits, but that was... no, I'm sorry, 100-1 reverse splits. Yeah, that might be the highest ever. Oh. Well, not going to change too much here. It'll just make these lows look way different, but we'll see. That's nonsensical trade more in May. Well, I bring it up now because so many people ask about it. Like, hey, sell in May and go away. All it says is that statistically markets really just go flat. It's not like they crash. So I don't know. I don't know really much more what to say there. If you know that markets historically have kind of a flat period of time, then if you own positions, I might get a little bit closer to my strike price with those calls and get more premium for it, because you're probably not going to make up for it on the underlier for that 3-4 month window of time as it just goes sideways. Oliver says, I'll be buying CMG. Keep in mind, Oliver, when a company makes an announcement for a split, what typically happens, surges aggressively going into the split on the day of, it gaps up, and then for the next few days, you see a significant sell-off. So when we get to that sell-off date, I'll put a vertical line here just so we can kind of keep an eye on that one, because I may actually trade that and look for shorts. That's going to be on Wednesday, June 26th. On that day, you will probably see this thing gap up and then start to sell off, because what happens is all these people now log into their account. If you had 100 shares of If you had 100 shares of Chipotle, you now have 5,000 shares. And you're like, yeah, what? Yeah, I have 5,000 shares. Yeah, unfortunately, it's not at $3,200. It's going to be at $150 at that cost. So people like to sell off of that, thinking they have too much exposure to Chipotle, but it's still the same overall dollar amount value, but they inherently sell, and then you see price start to drop from there. So be careful now. How do charts adjust for splits? Let's see. Error, YouTube is not receiving enough video to maintain smooth streaming. So are you guys getting skippy video here? It looks like it's skipped on my end. So what they'll do is they backwards it down. They just divide by like a 50th. So all these historical numbers will get divided by 50. So this will become, back here, whereas 1800, just take 1800 divided by 50. Yep. So if you look at something like Microsoft, it does stall once in a while. It's because I'm doing, Oliver says, I'll wait a week for it. Yep, there you go. I would wait a week. So if you look at Microsoft, here's your daily of Microsoft, right? And they haven't split for a while. But let's go and scroll through here, see when they did their last big split. All right, so they did a split back here in, wow, I'm back to 2003 was their last split. I feel like that's kind of crazy. They did a 2-for-1 split back in 2003. I feel like they did more than that, but okay. They did a 2-to-1 split in 1999, a 2-to-1 split in 1998, jeez, a 2-to-1 split in 1996, and it just keeps on splitting. Like over a 2-to-1 split in 1994, 3-to-2 split in 1992. The point I'm getting at is Microsoft was not down at 40 cents. It's just this has been so split adjusted. If you look back to their IPO date, it makes it look like their IPO price was 8 cents. It was never 8 cents, right? But that's just because of split after split after split after split. That's why we have that. So it just basically takes everything and divides it by 50, which is why you get these crazy looking charts sometimes. What was a good one? How about Boyle? Right, so they do a split adjust on Boyle all the time. These are reverse splits. I mean, if you look back out of this chart, you're going to be like, wow, Boyle was trading at $730,000 a share? What? It's because they just take this and multiply it by whatever that reverse split is, and look at some of these reverse splits. You had a 1-to-5 reverse split, 1-to-4 reverse split. Most recent one here, 2018, you had a 1-to-5 reverse split, and then the one that just happened here in 2020, you had a 1-to-10. And the recent one was just a couple months ago. You had, actually about a year ago, 20-to-1 or 1-to-20. So it's terrible. It totally distorts the charts. That's all it does. CMG sells big fat rice burritos like a typical fresh places. They also have E. coli breakouts. Yeah, E. coli breakouts. Now you're getting a little bit into the fear mongering. Every now and again they have something. I'm sure local restaurants get them too. They just don't get made in the public spotlight because they're not publicly traded. It happens. Bad stuff happens in these places. All right, how much time I got? Boeing. Let's real quickly just take a peek at what happened with Boeing. I've been looking at the Boeing chart. I still want to buy Boeing, but you saw the FAA is coming after them for issues with regards to reporting of mechanical problems and how they're repairing those things. That's just more bad news for Boeing. If they keep coming in there with more lawsuits and more investigations, it doesn't bode well. Now, the chart didn't really react to that. You saw it was slightly down today, down 0.8%. I have this yellow box down around that 140 line. If we get down to the point where the premium is attractive enough for 30 days or less, I will probably look to sell puts down at 140. But for right now, the premium's just not there for me. I thought we would continue to see this drift lower, but we had that really nice bounce off that 159.70 mark back in late April. So all in all, Boeing still holding okay, but another FAA investigation not going to help their cause at all. One last little piece that I wanted to get to, because I've been talking about how I think the lending side of things is going to be a real issue here. I have a picture of a bank here with no customers in it, and it just says lending woes. So from some of the statistics that was released today, or released by the central bank, the Fed, they do surveys of their member banks. And it was showing that because the lending standards have tightened a little bit, they're seeing a significant slowdown in demand for commercial and just business investment loans. And really across the board, it looked like lending was starting to slow down. Remember, the fewer loans that go out there, the more you constrict an economy. The more loans you put out there, the more money there is to buy stuff, right? That's what you want to see fueling economic growth. So to Sarah's question about recession, this is definitely not saying that there's a recession. But if lending gets tighter, meaning they're seeing fewer and fewer loans, fewer people are qualifying, the criteria and requirements are getting more and more strict, then that could slow economic growth. So keep an eye on that one. It increased. They say the difficulty to get a loan increased from 14.6 to 14.8, or 14.5 to 14.6. So a slight increase in the requirements for lending, but really the commercial loans was ugly, and I think we've kind of forecasted that as well, talking about commercial real estate as well, and things generally slowing down there. So just wanted to see if that was a piece of data that I saw today that I think may become a bit more problematic in the future. Marcus says, does anyone use an online bank? I don't. There was one period of time where I was going to switch everything over. I just never got to it. I have several friends that use it and they love it. If you don't need to go into a physical bank to do your business, online banking is the way to go. I've always been a Chase client, which I kind of regret because they don't pay you anything. But if you don't need to go and make deposits or use the physical bank services, why bother, right? Just go to an online bank. Ally is a good one. SoFi is another, decent one. So they pay you much higher interest rates. You get the same basic features and functionality. And some of them, I believe, have access to, a huge network of ATMs. So you can pretty much stop anywhere and pay, use an ATM without the fees. Naum says, I used SoFi for a while. Why'd you stop? Just curious, if you don't mind sharing. Tower making CME price go up and down so you can... And let's see, there were a couple other questions here I want to make sure I get to as I wait for Naum's answer on that one. So I have one or two questions here, and I'm going to wrap up because I just got a ton of stuff I got to take care of. Here's one from Philip. This was sent in on YouTube channels. Thank you, Philip, for that one. He said, I had a question about institutions. Is there a way to find out stocks where institutions are increasing or reducing their stake? What are some good sites to get this information? What you probably have learned about me over the years is I'm very jaded. I don't trust financial institutions, and I think that they're all designed and built to take your money. If you want to go and look at what institutions are buying, I personally don't think you get that clear of information. So say, for example, you want to know what JP Morgan is buying, what are they accumulating? You can go out and see who's the major shareholders and kind of deduce, are they increasing or decreasing that way? However, if I'm JP Morgan and I am trying not to let people see my footprints, I have hundreds of subsidiary companies that I can be accumulating positions through that don't directly tie to my name. And therefore, you won't know that it's me accumulating. So I don't believe that there's one site where you can actually definitively see, XYZ is building or unwinding a position. One thing I do like to do is look at Guru Focus, which isn't really for an institution. It's more about an individual or fund managers like Warren Buffett or Bill Ackman and things like that. You can look at Guru Focus and it'll show you, but even if I did find that information, Philip, I don't know if I would trust it because it's this game of deception. Financial markets are wizards. I'm the one who has the Merlin name, but I'm not a wizard. The financial firms are wizards. They're making you look here with their upgrades and their downgrades and, oh, here's our press releases and we have an analyst covering this. But behind the scenes over here somewhere else, that's where the shenanigans are happening, and that's where they're making their money, by manipulating you by looking here. So I don't trust it even if I got that information. I know. Let's see. What is Naum says? Better interest rate at a leader bank. ING Direct was one, but I don't know if they're still around. 6% liquid savings account. Yeah. So I know that Ally had, I think, 5.25%, but I think they dropped that now, based off what's been going on, because they're going to tie it to the inflation rate. Okay, I had two more questions, but I'm going to hold off on those. Let me go into our economic calendar and earnings calendar for mañana. And again, if you guys have any comments, questions, you can email me at TraderMerlin@gmail.com. Let me go into, there's two pieces here. First, I'll do the economic calendar for tomorrow. What am I teaching core in Irvine? Probably not for a while, Chio. Not for a while. I was supposed to teach it last month, and then I had to record a bunch of stuff, so I gave my class up, and yeah, it's unfortunate. So let's go look at what's happening mañana. Here is your Tuesday events. We get a little bit of stuff. Today was kind of a boring day. You can see really nothing here happening for the U.S. A bunch of FOMC members speaking, and they made us feel good about no rate hikes this year. No rate hikes this year. We'll see. Tomorrow you have a TIPP economic optimism number, but that's really it for the U.S. You have consumer credit, which is expected to surge, of course, as it has been, but nothing really that fantastic there on Tuesday's economic announcements. We do have some stuff happening later on in the week, which will be much more significant. Now, the earnings. We could look at Palantir real quick. Palantir had their earnings today, and they, well, Palantir, let me just bring that up here so you guys have it. Market cap. They missed their earnings. So here you go. They were actually in line with earnings, but their stock was all over the place in the after-hour session. Let's go at PLTR. Oh, down 6. It was up 8% during regular market hours, now down 6. So let me bring up a 5-minute time frame here so you can see kind of the craziness that happened. You know, it started off surging to the upside, then came screaming down, actually rallied up a bit. If you went from its closing price to where it is right now, at one point... hello, why is it not working? Hold on. Trend line. At one point, this thing was down 10%. Now it's down only 6.15. So not doing too bad in that after-hours session. Other companies that were reported, you had Vertex Pharmaceuticals as well, which is just slightly up, and Microchip. But really the big stuff starts to pick up a little bit later on in the week, at least from my perspective. You've got Disney reporting earnings tomorrow, BP, Arista Networks, Duke Energy, and that is kind of it for the big ones. For the energy players, here's Sempra Energy, which I think would be a great recession play as well. You have Suncor Energy, Occidental Petroleum, and quite a few others. So there's your economic calendar and earnings announcements for tomorrow. Can we look at GeoChart? Your thoughts again? All right, now I'll do that. Let me bring this up to a daily time frame. Geo Group, this bad boy, the REIT, right? Is that what you want, this REIT? I mean, what's to say negative about this? The only thing I don't like is it had these real big surges up. Like the uptrend before was just beautiful. I'd put a trailing stop on this one because you just recently made a new low. Actually, today, you kind of just broke this pivot low, which is right on April 19th. So, you know, for me, if I've been long this, I'd put a stop loss down below 1367 and call it a day and enjoy my winnings. But, yeah. DJT still popping. By the way, did you see that I believe the Department of Justice slapped a fraud lawsuit on the people who created that thing? It's funny because I said fraud on the show the other day, and I think Mike got upset with me. He's like, it's not a fraud, it's a legit business. It is a legit business. It's just the way that it's constructed and the way that it's peddled and pushed by people is not all that it claims to be. And if you look at the numbers behind it, probably not going to make it. But yeah, it had a nice pop today too. I was laughing over the weekend when I saw that headline. I was like, oh, this thing's going to crash again. And it was up 2.61%. I'll tell you, if he wins the presidency, you know, this thing's probably going to have a huge surge. You know, I don't believe he's allowed to publicly promote and plug his own company. I read some things here where a president cannot, you know, run a public company as a president. Well, he doesn't run this. He just got his name on it, and he's got a bulk of the shares. He's got a ton of the shares. But he, knowing the antics of Mr. Trump, he would certainly he would go to a press conference and say, "Oh, I'll be tweeting that out on Truth Social and Truth Media, whatever it is, Truth Social, and pushing more and more people to use that." Would not be surprised to see that if he wins. If he doesn't win, then this thing will probably just tank and fizzle away. But if he does win, then yeah, this thing could do really, really well here, as more people will probably push it, go towards it, and he will probably promote it and push it even more. Yes, I saw that too. 10 more whistleblowers are ready to talk about Boeing's technical failures. Well, you've got 2 whistleblowers are already dead. It'd be very interesting to see what happens. I hope nobody else dies in this, but man, tell me this doesn't sound like a movie story, the Boeing saga. But he thinks he can do anything he wants. He does, man. So far, Lori, it's working for him. We will see. We will see what happens. Which part, Lisa? Which part? Come on, DDT is just a legal defense fund for the kangaroo court litigation. Possibly. But the thing is, I don't believe that he's using his own money for legal fees. He'll go and he'll petition, raise money from his constituents, and then he uses that for his legal fees. And if I'm going to make billions of dollars off this, which he might make billions of dollars off this. I'm going to take that money out myself, and I will use my constituents to fund everything for me. Why not? I can. That judge is going to be put in jail. We'll see. Going to put him in jail. We'll see. I don't know, man. It's soap opera reality TV that I don't know if I'm that big of a fan of. All right. Before I wrap up, you guys tell me real quick, the live feed today, was it too skippy? Was there too many freezes? Because I might bump it back up one. Remember, I have 3 levels of streaming latency that I could give you. I don't like to do the 1 minute of latency. It's just I'm waiting for answers, and it's much more engaging when you guys can respond quickly. But if the quality of the show diminished and it was skipping too much, then I'll have to reconsider and bump it back. But I've been holding off doing it for a while, but I feel like I've got a computer that's strong enough and internet that's good enough for it. But hopefully it will be okay. Let's see. How can I get people to contribute millions of dollars to my trading account? Become president. Now, Lisa, become president. Someone asked for a link for my speaking. Yeah, let me see here real quick. Give me just a second to bring that one up because I forget exactly where I put that link, but I will put a link in the chat here in just a second as I chat to you and pull up my email for it. A few skips, good here. Okay. Because I see a little spinning wheel every now and again show up on my screen. I'm like, oh, I hope it doesn't drive you nuts. Well, if it bugs you, let me know. I'll try the middle one tomorrow. Here is my link to my presentation. I believe you can get a discount on it as well. Here you go. It is in chat. There you go. So there's the chat, or the link to my presentation up in San Francisco if you guys can be around. Because I'm paying for all this myself, I'm literally paying for the flight and everything myself to do this. I didn't want to stay the night and spend more time there. I need to get back and get some stuff done. So I'm just going to be going up to San Francisco for the day. And I'll be there for my presentation from 10:30 to 11:15. From 11:15 till 5 o'clock, I'm pretty much free and going to be wandering around the hall. So hopefully I'll see some of you guys there. All right, that's going to do it for me, everybody. Hopefully you enjoyed it. Hope you learned something today. Thank you, Philip, for the questions. Who else do I have to thank for the questions? We had Scott. Best way to make money in a market crash would be to be really aggressive and be shorting. But that's a gutsy thing to do. And then Sarah, thank you for that question. Show is built around your question. If you have something you want me to build a show around or topic you want me to cover, email me at TraderMerlin@gmail.com or go down to any of the YouTube videos I have. Check the archives. You can put comments on anything, and I will find them and put them into the show. Thank you guys so much. Have a fantastic remainder of your day, and we're out before the next ad presentation, and it's only a 49-minute show. I'll see you guys tomorrow. Take care.